joining us to help choose home when care is needed. A podcast all about the benefits and value of receiving care in a place that you likely feel most comfortable, wherever you call home. I'm your host, Maryglenn Orsini, and I've been involved in healthcare at home since 1981. Each episode, I'll be talking with a guest who will help us in our quest to educate about healthcare at home. So let's get started on today's episode number 16. Our guest today is Maryglenn Boals. Maryglenn has really spent her entire career focused on healthcare, insurance, and the challenges faced by the aging and disabled. She's a former licensed nursing home administrator. She has been recognized locally as well as nationally for her work in the field of aging. She is certified by the Corporation for Long-Term Care and has trained with one of the country's top elder law attorneys. Maryglenn also holds a certificate in gerontology, and her personal life, however, is just full of experiences that have taught her how valuable knowing the ins and outs of long-term care can be. Maryglenn, when you and I first met each other, it was because you're in the long-term care insurance space, and I was fascinated by your focus on that. Can you tell me how that happened and why you ended up focusing on long-term care insurance?
Well, as I shared with you before, I started in the long-term care space, kind of on the other side, on the care delivery side. After I graduated college with a degree in public health and gerontology, I ended up working in nursing homes as an activity director, and then grew into an activity consultant around the state, and later became an administrator. So what I saw going on in that space was people and families, struggling to figure out what level of care they could have, what could they afford, what were the other services coordinating with, Medicare, Medicaid. People really struggled to understand the whole continuum of options. And now you have to remember, you have to go back in your Wayback Machine. This was back in 1985. So many options that now we discuss weren't even there. Home care has just exploded with so many options. And assisted living didn't even exist. It was just starting to emerge in 1985. So a few years ago, about 11 now, I looked at it and said, what can I do with all this knowledge of this continuum? And I thought, well, I can really help and guide people. And one of the biggest things is being able to afford the options that they'd like to have. A lot of people think, oh, I'll have enough money. But I think the reality of these costs are kind of startling, and I think they underestimate them greatly.
So you have personal experience as well with caring for aging parents. Would you walk me through how having personal experiences has changed what you offer or what you say to people who are looking for ways to pay for care?
I think the biggest thing is to really define your goals. Is it I really want to stay at home as long as possible? Because we don't know what may happen to us as we age. Will we live a long, full life, and it'll be the frailty of old age that causes us to need some assistance? Or will it be, maybe a dementia that comes earlier, and we may have a very long period of care? The personal experience I had was dealing with my parents, and I was a long-distance caregiver. I was caring between Arizona to Iowa, and my parents are in a smaller town in Iowa, so we didn't have as many options. But by knowing the continuum, knowing things to look for, knowing who to ask for, I was able to put together a variety of solutions as we moved along that continuum. My father had more immediate medical needs, and then my mother had, the beginnings of dementia. So we were, kind of navigating quickly, how long would home care be appropriate? And then when my father passed away, we needed to go into more a supervised setting purely because my mother was an insulin-dependent diabetic. And the rules for some of that was not going to be conducive financially for them. Unfortunately, by the time I got in the long-term care insurance and planning business, they were uninsurable and had been for years. That's one thing people have to think about is with these type of products, you have to still medically qualify through underwriting.
So when would it be appropriate in a person's life to think about planning for long-term care?
I think it really starts to become an awareness when people are in their 50s, and usually it's because they're starting to see changes maybe in their own parents, people around them, a grandparent, and they're starting to realize, wow, this could be me. And a real emerging market is the elder orphan. And that term is someone who is, maybe it's the woman who's never had children, doesn't have siblings, the parents are now gone. And we have to do some very unique planning around that person, because even if they want to remain at home, do we have other support systems? Do we have other socialization that's going on for that person? And who's monitoring if that care is appropriate?
So walk me through this, because in your 50s, you're saying, okay, I'm seeing my parents have issues, and it should be a part of my long-term planning, my long-term financial planning, actually, for retirement, I'm thinking. Is that correct?
That's correct. Kind of the overall picture. And, I work with people who have done a great job saving, and we look at, will we be using more of their own funds, or is it someone who hasn't maybe put away a good amount of funds, or maybe they have reasons why they want to preserve and protect more of those dollars for legacy gifting to, children, to charities, to churches, to whatever that might be. But I think it's helping people understand what these different choices and options may cost if that's what they're choosing. I meet with people who, I have one person who said, I don't ever want to step foot in a skilled nursing facility. And we literally maxed out the amount of dollars that you can on a long-term care policy. It's up to $500 a day, because they said, I want to stay at home no matter what. We can design for that. But realistically, I have the conversation. That may include you're going to need registered nurses. It may go to a point, it goes beyond just someone helping more in the home care space. It may become more medical, and they don't care. They're willing at that point to go into their own funds beyond the $500 a day. That's a very extreme case.
Is there a standard case or a most normal scenario that you see when people are thinking about planning for long-term care?
Absolutely. Usually what we're putting together for people is anywhere between, they're looking to add to their available dollars, maybe $100 to $200 a day, and giving them somewhere between $3,000 to $6,000 extra to put towards that with the cost of care. Now, things like home care in the beginning are very cost effective, and you may only need a few hours. And I was looking up a few numbers for you, and home care, the national median right now is about $22 an hour. Depending on where you are in the country, that can vary a bit, but that's kind of our national median. And what we're seeing with those numbers is in the last 5 years, we've only have a growth of about 2.5% compound inflation. So the competition within that space is really helping hold the costs down, which is really advantageous to the customer. So we may range anywhere from $1,500 to $10,000, over $10,000 a month for home care. So when we then say we want between $3,000 to $6,000 to put towards that, we have to take into account how much is it in the area that you're anticipating living. And I always talk to people about where are your children living, because you may need to move where they are at that point in your life. So we measure a lot of different variables as we're kind of factoring what our number of what we're adding to our portfolio might be. And the length of time could range anywhere between, the minimum policy has to be 2 years, and then it can go up to anywhere to lifetime coverage. How long do you want that stream of money available should you need it?
Are there any indicators from a person's lifestyle, genetics, family? Are there any indicators that would give someone a clue about what they might need in long-term care, or is it really just a crapshoot?
I think it is interesting. I've always found it fascinating that we have preferred health discounts, but we don't know that preferred health when you're 50 is going to mean something different. The underwriting for long-term care is different than life insurance. Life insurance says Do you have heart problems? Are you going to die? And when might you die? Do we think it's sooner rather than later? In long-term care, they're going to look more at things like arthritis, musculoskeletal issues, diabetes, obesity, a lot of different factors that we know impact more some of those chronic health conditions, not so much acute, but they're going to be chronic, and they're probably going to pile up, and we're going to end up with a sum of difficulties as we get older. So those are the tough ones. There are things that if you've already been diagnosed with any early dementia or anything like that, you are completely uninsurable. The insulin-dependent diabetics are uninsurable. So it's just a little bit different how they analyze that. But to some extent, I think we're starting to see more data on that. You have to remember these things are purchased maybe when you're 50, but the average age that a claim is initiated is age 82. So we have 30-some years tail on this product before we start to see how is this person really going to use it. And we're starting to really get some of our first data in how people are using their policies.
And what percentage of people in America are currently insured with some form of long-term care insurance?
Well, we used to say the number is kind of around 10%, but I think now it becomes more complicated to really answer that question because there's a number of products that some financial advisors are using that may have chronic health riders. They're not exactly long-term care, but they may function and help fill in that space. They're also adding some of these long-term care riders to life insurance. So a little bit harder to track the data, but it's still a small segment. I think it's still something people don't want to acknowledge. This is coming. This could actually happen to me.
Okay, so I'm in my 50s, which I'm not actually.
You're asking for a friend, right?
That's right. I'm asking for a friend in her 50s. And I'm really trying to decide on a fairly limited budget, how am I going to allocate my funds to be able to live now, but also to be able to have some type of cushion for the future. Can you talk to me a little bit about the riders you just talked about? Because I've not heard about the life insurance rider and a chronic care rider either.
Couple of things, what you're saying. I think it's a really great question because a lot of people assume this might be out of their reach. We really do a deep drill down as to what is that little gap we might have, because when you truly are needing some of this type of care, you're not going to be running off going on trips and other things, we assume. You're becoming more and more limited. Your budget and where you're spending your money would change. So we try to drill that down. We also have some data from claim utilization that shows that 92 out of 100 times, if someone had a 3-year policy, which is actually a pretty short pool of money, meaning that once we went on claim, and if we used it fully every single day, it would last 3 years, that 92 out of 100 times, that policy took care of their need. So for a person who says, well, I can't, I'd love to have lifetime, but I can't, let's look at statistically, could that possibly help you? Does it defer some of those costs for at least 3 years to help you maybe meet with an attorney, and get more aligned for Medicaid in your state to understand? Because if you're going to be facing a very long dementia claim, that could be. The other thing with some of these life long-term cares is maybe people have cash value life insurance that already exists. It's got money built up. There's something that's called a 1035 exchange that you can switch into a life long-term care product, and then you would have long-term care coverage, and it didn't cost you $1. The money doesn't ever see daylight, so there's no tax consequence. So that's a very cost-effective way. We look for any way, is there anything else that would help pay for your long-term care where you don't feel that out of your budget? Because we never want someone to be sacrificing current lifestyle to have coverage. We have to make sure it makes sense for you. And if you're really one of those people that's on the line, we have to have a very candid conversation about what is the Medicaid coverage in your state. And here's how it looks and how it works. I will never badmouth that system because it is our safety net system for people who, for whatever reason, things happen in people's life, they end up needing that kind of assistance, it's there for them. So understanding how if they did spend all their money, go through all their own funds, and need to qualify for that, how does that continuum work for them? So there's a lot of analysis that we do with our clients to make sure we're getting you into something very comfortable for your budget.
You and I have presented together at American Society on Aging and have maintained a good friendship over the last few years. And so you're who I call whenever I have a long-term care insurance question, but this is really for consumers in general. How would a consumer pick an insurance agent to talk with and know that that agent had their best interest at heart, as I know you do when you counsel your clients?
Well, one, I would love to help them because I can work in any state. You get a license and you can be represented. I work with people all over the country. Much of this can be done by phone and FaceTime, all this technology. But one of the other standards they may look for is something called a CLTC. I have that designation. It means they're certified in long-term care. It's a 2-day course that goes through really talking about all the things I just mentioned. Is there money through the veterans benefits? Is there money through other programs? And then helps people get into that right-sized program for them. Find a product that works for them. So that's one designation I would look for. The other is, talk to their friends. Is there someone that they've worked with that was trusted and they feel like they did get a good analysis? One of the things that I've started doing over, most of my career with this is also serving as someone who maybe you bought your policy 20 years ago and you have no idea what you have. Your agent is gone. We charge an hourly fee to review a policy to kind of tell you, okay, here's what you have. Let's put it in real words, how this would work. And then also coaching you on how, this would work with your goals. So you're telling me you wanted to stay at home. This is your policy. This is how your elimination period works because there can be two different kinds. There can be service day, calendar day. And you want to really understand some of that contract language to really know how it works. So you need someone with that level of expertise that can go that deep to really serve you. Now, we provide all that to our clients without any fee. If they've purchased insurance through us, we feel that's part of our obligation to continue to serve them all the way up and into claim. So, I would say that CLTC designation is one thing I would look for, but obviously I would love to assist anyone that has questions.
The other question I had in that range of questions is when an adult child intervenes or gets called in to help with parents when they do have a dementia, and no one seems to know what's been purchased, or what the finances are sort of a mess. Is there a way to determine if someone has long-term care insurance other than finding the policy or finding canceled checks somewhere in the history of a parent's finances?
That would be my guess. And kind of backtracking, was there an accountant? Because a lot of times this is a deductible item. So is there something in the IRS records? Did they work with any type of financial or lawyer or someone that they might have mentioned that there was something? But you're right, it might be the check register. If there was something that was mentioned way back, like, I had something with, let's just say, Genworth or John Hancock, just even a passing word, I think then you can start a search with that specific company. And if they have obviously the person's Social Security numbers and other identifiable information, then the company would be able to start searching. But that's really tough. It's one of the things that through our process, we do a 3-step process. And the last one is when we deliver your policy, we offer the option to have either your adult sons and daughters or some person who might be managing your care at that time of need on the phone, in the room, so that they're hearing a little bit about it. Because I have no idea why, but a lot of people do not want to talk about that they did this. It's like they run home and stick it in the drawer. They're relieved that that conversation is over. And we have to say, no, we need to let some people know you have this because you might not be able to tell them if something happens, or maybe at that point you have some cognitive problems and you don't remember you have it. So we need to let key people know that you do have it.
Is there anything that I have not asked you today that you thought I was going to ask you, or that you would love to tell consumers who are trying to decide should they choose home care as an option?
I think one of the biggest things is if someone's selling you a policy, if an agent is trying to sell you a policy, you do not want to agree to a 50% benefit on home care. This has kind of become popular, and people would try to cut the funds down. I don't think you want to be limited on what you spend your dollars on. So we want that ability. If we have that $100 a day or $200 a day, we want all of it to go for either option, not say, well, you'd only have 50 if you wanted to stay at home. Now we start limiting our options. So I think making sure that if you're purchasing something, it's a comprehensive policy, and knowing that there's other things in those policies that really add value. Like inside most of them, there is a benefit for home modification. So think about that with home care. Now we've added maybe some grab bars in the bathroom or in the shower, maybe a raised toilet seat. And also, usually there's money in there for emergency buttons. And people don't have any idea that these things are sometimes built into the policies. So I think it's a good idea if someone, even early on, is needing home care. I think there's often additional safety factors like that, that you should be accessing those dollars. You've paid for that coverage all these years. Let's use as much as in there.
It is so refreshing to talk with you because you talk common sense about long-term care insurance, and I really appreciate that. I know our listeners will as well. So, Maryglenn, good touching base with you, and thank you so much for your time today.
Oh, I appreciate it. Thanks. Always wonderful, Marylene.
Thank you so much for listening today. And a special thanks to our sponsors and partners, Access, National Association for Home Care and Hospice, and Core Cubed. You can find more on our website, helpchoosehome.com, and on social media. Join us, won't you, and spread the word to help choose home when care is needed.